everybody. Welcome to Ticker Highlight Show. We are going live with market. 5, 4, 3, 2.
Good morning, everybody. Good afternoon to my friends across the pond, and welcome to the State of the Market Show and Ticker Highlight Show. I am Mark Sebastian. I am your only option. I am the founder and CEO of OptionPit. In today's show, I'm going to give you a brief update on what we're seeing in the markets. I'm going to run through our picks that we like for the our Ticker Highlight Show premium group. We're not going to give you the trade, but we're going to provide you some names that we think are going to be good, strong this week, and some names that we think might be a little soft, and give you some trade ideas. Then we're going to bring Tim Colby on, our head of macro trading, and he's going to talk about what we're seeing in oil and bond markets and some of the decoupling that is starting to happen. There's a lot in flux right now, and a lot of uncertainty, but not the same kind of uncertainty we've been getting. So let's talk about these markets as we start the show. S&P is up about 23 points, good for 1/3%. The NASDAQ looks the strongest. It's up almost 2/3%. The Dow, the laggard, up about 0.2. Friday's action, we saw IWM kind of leading us, the Russell 2000 kind of leading us all day. It is not doing that as much today. That being said, when you look at markets and kind of how we reacted on Friday, there's definitely a sea change starting to happen. We had oil up. I mean, look at USO on Friday. USO had closed $124 on the first, and then on the second, at its peak, it was 140 and still closed 137, up like $13. And here we are today, and it's still up. If I told you that oil was going to make that kind of jump, you would have told me, Mark, well, the S&P and the Qs and the like are going to get absolutely annihilated. And that's the way it looked like in the morning when we opened down nearly 100. But we kind of slowly and methodically rallied all day until the end of the day when we kind of really took off. And despite oil being up $13, the S&P closed green. And that, friends, tells us that we're starting to see oil maybe not drive the bus the way it was. And markets are hopeful. We're in this kind of sit and spin mode right now where we need a deal, right? We want a deal. There might be a deal. But at the same time, oil continues to go higher. There continues to be bombings. And that is putting a floor underneath how low the VIX can go, whether the market can take off, and kind of sets, two forces working against each other that basically since middle of the day on Friday has kind of held us in this relatively tight range. And this is despite average true range continuing to show a lot of strength. On a daily basis, the S&P is averaging about 98 points of movement, good for about 1.5% a day. Today does not appear to be that. We're going to hear Trump this afternoon, and there's a lot of uncertainty, but not the type of uncertainty which would be like, earlier on when we didn't know how far this could go. That causes the market to drop. This type of uncertainty causes the market to kind of sit and spin as we have the higher oil versus hope for peace kind of fighting against each other. And that's why this morning we're behaving the way we are a little bit. Coming off the weekend, VIX is up, but all in all, it was a pretty bearish week for volatility. We closed out on the 27th with the VIX closing at 31. It gave away over 7 points on the week. Pretty good selling. Little bit of a bid today, but remember we have weekend effects. So net VIX is up, 0.3%. Nothing crazy. All right. Now, with that in mind, your mindset needs to continue to be day trading, short-term trading, short-term, non-directional trades like a strangle, and long-term trades where you can build wealth, right? Because there are stocks on sale. Not all of them, but there are stocks that are genuinely relatively inexpensive and worth taking a hard look at. Those are the ones that we're going to use Sybil for and the Series Club to find long-term trades. Other than that, near term, I like non-directional. We crushed it using strangles last week. And I like 1 and 0 DTE, knowing that 0 DTE is going to be kind of our main weapon right now. Vaz and myself, we're hosting a 72-hour Wealth Summit starting Wednesday. You can register to join here. And, you're just going to want it no cost. And we're going to walk you through how Vaz approaches day trading. She's been absolutely on point, continues to make money using her game plan strategy. And this is going to be an opportunity for you to see how it works. Maybe take a couple trades. It's going to be a lot of fun as well because, Vaz is always entertaining. All right. So with that, kind of the table set for today, now I'm going to run through kind of our stock picks and what we're looking at, and then we'll bring on Tim. Let's start with Andrew, who's out this week, and he likes DraftKings. If you look, it's definitely taken on the chin, finally starting to catch a little bit of a bid here. I'm very interested to see what Alicia thinks of this chart. My guess is this is hitting one of his scanners. Personally, with the way this is moving, I'd like to see it break over this kind of tight convergence of the 21 and the 50-day. You get this one over 25, and I do think it's going back to 29. I don't hate it. Alicia's long is Walmart. It's been really strong. This is one she and I have been looking at. She's done a couple of trades in Project MNS in Walmart that have gone very well. And she continues to like it higher. And I got to tell you, looking at that chart, I agree with her. Hans is liking Akamai Technologies. It's been in a range. While, as you can see, since its earnings back in February, it's had a nice run. Up this high, we've seen a little bit more volatility up and down, but the trend does continue higher. And I like Dow Chemical, which has been on a really strong run. I'm looking for an opportunity to get in. I'd love to buy it off the 21-day here at 38. But anywhere above 40, I think Dow Chemical could pay us. All right, now let's go back the other way and pick out the stocks that we want to lose. And we'll start with me. Again, a longer-term play on the short side, but I continue to believe that there are real problems here, and they're eventually going to get charged by the federal government. That's Super Microcomputer, SMCI. All of the activity I see in the options is longer dated puts and medium term puts. Buying. Because just about everybody's convinced this sucker is going to take it on the chin. In our special situation that we did last week, we did a trade around this where we bought puts on this, and then I put on calls on the other side that I believe is going to be winning out of this. And so far, so good. Next up, Micron Technologies, and I could not agree more. This is Hans's pick, one to lose. I cannot agree more. You're getting a dead cat bounce here, a little bit of a bounce. And people are going to point and say, well, Mark, what about SanDisk? That thing's been going straight up. Yeah, Micron kind of made this move already, and you're seeing companies make moves to avoid paying these crazy memory prices. Memory prices are starting to drop as adjustments are made. So I'm with Hans. I think Micron probably is at its peak. It's typically a bit boom and bust stock, and it's definitely been on a boom. It might be time for a bust. Leisha is still, I asked her this on Thursday. I said, when's the time to buy Nike? And her answer is not now. You look at Nike and what they need to turn around. There's so much work to do there. So we continue to say, hold off on Nike. It's not time. And last but not least, Andrew is looking at BP. Now, BP has had a huge run. We saw what happened to Exxon and Chevron when there was inklings of peace. Right? Look at this. Look at the move lower Chevron's had. BP, which did not run as hot as Exxon and Chevron, still really running hot, still right near its high. If you're looking for an energy company that does potentially have some downside after a really strong run on a peace deal, BP might be your number one candidate. So this is one where I'm looking at it as we start to look like we're getting to the finish line on a peace deal. BP might be the play that I would go to look to get, to look at energy names to potentially move lower. So there you have it on the bull side. Dow, Akamai Technologies, Walmart, DraftKings. And on the time to lose it and or maybe even think about shorting, Supermicro Computer, Micron Technologies, Nike Incorporated, and BP, formerly British Petroleum. Now, in about 15 minutes, Leisha, myself, Hans, we're going to go behind the paywall, and we're going to look at these 8 names, and we're going to find a trade to put on around it. That's Ticker Highlight Show Premium. Now, Ticker Highlight Show Premium, you're saying, well, how much does that cost? It's name your own price. So you think it's worth $5 a month? You can pay $5. You think it's worth $10 a month? You can pay $10. You think it's worth $1,000 a month? You can pay $1,000. So whatever you think the value is of getting access to 4 traders every Monday to put on a trade idea and walk through what we see in the stocks and what we see in the options, and again, execute and follow a trade to its zenith, then you can name your own price. The order form's being dropped in. All right. Well, like I said at the top of the show, we have a lot changing in the market, right? Again, energy way higher on Friday, continuing to be slightly higher today, Monday, and yet the S&P is up. What's behind this decoupling? And then I want to look at some of the other major markets as well. So with that, let's bring in our head macro analyst and head of macro trading, Tim J. Colby. He is, and we're going to talk about some energy. Good morning, Tim. Happy Easter.
Happy Easter. How you doing?
Doing good. I took my first crack at a beef Wellington yesterday. Came out pretty good.
Go? Yeah,
it came out pretty good.
Those
I
are
was
hard.
surprised how, once you get going, it's not that hard, but the prep is just, I had to start cooking Saturday morning for something I was eating Sunday night.
That's
in order to get
like a
that thing
Thanksgiving
off the
almost,
Yeah, but it was delicious. It was delicious. It came out, it was not overcooked, which is always a win.
Yeah.
All right, so Tim, you and I were talking about this morning. I had a little voice crack there. I thought Friday's price action between energy and S&Ps and Qs to be pretty curious.
It was off the charts crazy. If this whole month, or if last month was crazy, Thursday was crazy, because I got to tell
Thursday.
you, when oil goes up 10% in a day, I mean, come on,
I know.
that was one of the biggest moves that had the whole run, and the S&P was actually up.
Yeah.
Was up, which is surprising. Now, what's interesting, if you looked at the curve on Friday in crude oil, so when I say the curve, what I mean is the crude is a futures contract. So it has contracts in May, it has contracts June, July, August, all the way up. Let's see, we can get out to, there's contracts trading with volume, maybe open interest, out to 2034, Mark. There's not much of a bid out that far. But no. So, but you get futures contracts all the way out. And my point was, crude was up $10 on the May contract on Friday. And you had the back months were actually down. So when you see a futures contract move, normally if it's going up, all of the contracts go up because the price is going up. But when you get in this weird situation, like right now, the May contract's 111, the June contract's 97, the July contract's 88, then 81, then 77, 74, 73. It tails down, kind of like we see in the VIX curve. We've talked a lot about this, the VIX contango versus backwardation. It's in backwardation right now, backwards to what it normally trades, and it's tailing way down.
Yeah, there is a 40-point drop.
There you go. Yeah.
In a 40-point drop between May and when you get to the November contract.
Exactly.
That is, you don't see that.
No, that's very crazy. And so like what it's doing today is kind of a little bit of a reverse of what it was doing on Friday, although it was very extreme. So there was a big move upward in the front month contract, and then the back months were actually being sold as they were buying that front month. And that points you to the idea that there's a real squeeze for actual barrels of oil. Like the spot market, when they say spot, that means the physical. What do you actually fill up the tank with? And that there's a squeeze on that right now. And so that's kind of, I know that's what was driving that market. What was really strange to me, though, is that you could have that much of a squeeze, because that was kind of a, fear-based rally there, and the equities actually did well. They got trumped. So one of the things I wanted to talk about here, I think what's important to today is that Trump's talking at 1:00 Eastern time. And that's the last time he had one of these little pressers. Things
didn't go well.
It didn't go well. It didn't go well, and I don't think he really cared. I think he was like, "Look, this is what we're doing, and I have my opinions, and I want a deal." And so he wants a deal, and he's really pushing hard. There is talk, and I'm sure everybody read about it, but the 45-day ceasefire that's being floated around would be phenomenal. Both sides right now. Iran said no rational person would agree to this ceasefire proposal. Trump hasn't signed off on it yet. They are scrambling to get something signed. And I'm I'm a hands off the mouse until 1:00, really, Eastern time, because you don't really know what's going to go through. When he announces he's going to talk, he's got a plan. And I think, Alicia put out last week, maybe it was 2 weeks ago, where right before he tweeted, somebody lifted 1,000 E-mini SPUs and hit 1,000 crude futures. Yeah. And then he tweeted, "Hey, I think we're going to have a deal." And then they, obviously when the SPU went up 100 points, they exited. And so I'm a little wary of that. And I think, I'm involved in options, right? So we trade options, and that's one of the things that options save you from on the risk side, is getting lit up on something like that. But I think depending on where stocks are, in and around that conference, we have it's later in the day. You're gonna have zero DTE. Get in there to the services that we got with that. Those short-term trading things. I mean, the risk reward is insane. But I think the market muddles around a little bit today until we get that news conference, because I think he's going to go out there. He's going to say we want a deal. We got till he gave until Tuesday night deadline. He gave a Tuesday night deadline, and there's the talk is increasing. So I'm not a war guy. I'm not a war strategist, but I know that the markets they're looking like they're going to move here.
My understanding is that we're starting to see some boats get through the strait as well.
Yes,
and I'm surprised that hasn't put some relief on the spot market and in the May contract.
Well, part of the problem is the boats that are going through are greenlit by Iran, except for the ones that are from Greece. And this is a shout out to Greece and the Greeks for getting stuff done. They don't agree. They don't really admit to paying a toll. But the Greeks know how to get ships through, and I think they've gotten the most ships through so far. And it's kind of like hey, we need the oil. We got to get it through. And so they got to grease somebody over here. They got to pay a little money. They're getting some ships through. The French got a couple ships through. But again, this is all on the premise that Iran is letting them through. These are not our ships or ships that are friendly to the West, not the West, to the allies, if you will. But all of that kind of goes to the Iran side of, hey, look, it's not going back to how it was. We're going to charge a toll. And that's not part of the deal that Saudi wants, or that the UAE wants, or that the US wants. We don't want a toll.
No.
But the market trading a little bit off the correlations. So the correlation was a one-factor market.
Yeah.
And oil
up,
was
market down, oil down,
exactly.
market up. That was what you expected, and it's kind of
it's breaking a little bit
on Thursday. Yeah.
And if you watching the bond market, and we're watching the volatility there, and the volatility is off quite a bit in the bonds. They had really rallied. I think people were really nervous about the fact that the Fed was almost going to have to hike, but that's still in that backwardation. So even though the vol is off, it's trading like the S&P, the bond vol. So it's got that backwardation where the high front month versus the high less high second month and third month.
Yes.
But
so to put it into Tim's point, April vol is in TLT is a little under 12. May vol is closer to 11, and so you see that, and then if I pull up ZN options, which are really how most people are really paying attention to 10-year volatility, because this is the most active futures contract, and you could see, you get some higher vol around April, but then volatility does start to come back a little bit. And the thing about bond implied volatility is like a tenth of a point in bonds in terms of changes in volatility is like a couple of points in an equity. Bond implied volatility is lower and tighter. So you have to be paying attention to the smaller moves and realizing those are actually big moves.
Exactly. It's like a giant tanker ship that's going through. If it makes a small little course correction, that's a big deal for a big ship, because the treasury market's gigantic. But yeah, so I think, again, Vaz has her 3-day thing this week. That's something to pay attention to. She's going to kind of walk you through how she's been cranking this market. She's really been doing fantastic on these short-term trades. And same with Alicia. Alicia's crushing it with the 0.2 TE on the MNS, the project MNS. So
yeah, I continue to think that the strategy to take is stuff that expires today, stuff that expires tomorrow, and kind of non-directional long strangles, because today's kind of inside, but on a daily basis, we are consistently moving more in a single day than strangles are pricing a week out.
Exactly.
And
that's that ATR number. Basically you run an ATR versus the historical vol, and you see that's pretty large.
Yeah. Absolutely. Average true range is pricing, and if you converted average true range into an implied volatility, you'd
Exactly.
be looking at like 30.
It's like a high ratio, right? So that's normally what I do. I take that ATR divided by a percent move in the stock, then you do yours divided by 16 or 15 point whatever it is, and then you compare that.
15.87. Yeah.
Exactly. And then you can run that ratio, and you'll see that ratio is actually quite high. It's a good sign to be in the zero TTs.
Absolutely. So those continue, and then longer dated trades make a lot of sense. If you've got a trade and it's profitable, take your money. That's been the one thing that it needs to consistently be a part of how we're approaching trading here. Tighter profits. I put on VIX puts early last week, right before the VIX completely collapsed, right? And sold them all the next day, up 50%, right? Someone said, well, these still have 3 weeks. Why are you selling them now? I'm like, because I'm going to be buying these back for like 80 cents. I sold them at $1.40. I'm like, I'm going to get an opportunity to buy these back for like 80 cents, and I could do this all over again.
Yeah. I didn't run this, but I should have run this before I got on. I was a little late to that. But if you run a count of how many days in a row the market's up or down, like the number of days that it's not trending, you have 2-3 days in a row of moving the same direction, it's not doing that. Like, so that's kind of another sign that it's a trader's market, is when you don't have any continuous days of up in a row or continuous days of down in a row. It's like +1, -1, +1, -1, +1, +2,
Yeah. About the only correlation how things move together. Normally, if the market was up yesterday, it's more than likely it'll be up today. That has been thrown out the window. There's a little correlation between how we close and how we open, but outside of that, even that isn't really working. What happened yesterday and what we're doing today are completely unrelated, and that is what makes a trader's market. That's really what Tim is talking about.
We are up against it. We got marching orders to move on to the ticker highlight show.
Yes, it is. It is 10:28. We got to go to the ticker highlight show here, the premium show, where we're going to go through those 8 names yet again. Those 8 names from the long side were Dow, Akamai Technologies, Walmart, and DraftKings. The ones we say to lose: Supermicro, Micron, Nike, and British Petroleum. Folks, again, if you want to access the ticker highlight show, you name your own price. There's an order form right here, and make sure you're joining me, Vaz, the team, on Wednesday, Thursday, and Friday for Vaz's 72-hour Wealth Summit. We'll post the link for you to register to join there as well. Tim, thank you for coming on and sharing your insight.
Thanks for having me, Ben.
I'm with you. I think we're going to just kind of be on hold until President Trump speaks. The afternoon should be quite fun, though. And so, Tim, thank you for your time. For Tim Colby, our head of macro trading, I am Mark Sebastian. I am your only option. We will be back tomorrow at 10 a.m. Eastern time, as we are every day, for the State of the Market show to guide you through this market. I hope everybody has a great trading week. And folks, I hope you had a wonderful Easter or are enjoying Passover. Happy Easter, everybody.